When it comes to your savings and investment plan, if you're working right now, you're probably trying to grow your wealth as best as you can, and you're focused on returns year over year. But I'm going to tell you something. The easiest way to boost your investment returns is simply by keeping more via taxes. This is often overlooked by many investors, many advisors, because their job is to grow their wealth. But when you look at everything through the tax lens first, you can see quickly how powerful tax savings within your investments can boost and accelerate your investments. Today, I'm going to show you the best ways that our clients utilize these strategies to keep more of their wealth. You keep it right here. Hey everybody, Chris Heerlein here of REAP Financial, host of Retire Ready TV every Wednesday here on KXAN, and host of Wealth Radio every Saturday morning at 11 on KLBJ. Thanks for making this part of your day. We drop new content here every Wednesday. If you enjoy our channel, please hit the subscribe button down below. Okay, we've all heard it's not about what you make, it's about what you keep. And it couldn't be truer when it comes to your investment and income planning. You know, we work with families at REAP Financial that are still in the savings game, maybe 5-10 years out from retirement. We work with those that are already retired. But no matter what category you fall into, keeping your wealth via taxes is going to be the number one way to boost your acceleration towards your retirement date and boost your retirement savings in retirement. The thing I tell our clients that are retired is if we can compose a plan to keep your wealth, it means a number of things. Number one, you can spend more because you're keeping more. You can spend more confidently. You can leave more money to your heirs. In many cases, leave more to charities or causes you believe in. The compounding effect year over year of having tax mitigation, tax savings, disinheriting Uncle Sam, the compounding effect of that can be massive. One of the first ways that families do it is via Roth conversions. We've talked about that on this channel for years, that you can convert pre-tax IRAs and 401ks to Roths, and then that money grows forever tax-free and you're never subject to required minimum distributions. Another thing to focus on in retirement is looking at what I call ghost income. When you look at your 1040 line 2 and 3, generally in that area, it's going to show you what kind of interest you got coming in, what kind of dividends you got coming in. And with today's interest rate environment being as high as it is, you're seeing good yield on CDs and money markets, and we're seeing, good dividends and things within the equity markets. And oftentimes when you're working, you're just reinvesting that income. You're reinvesting those dividends, and depending on the type of dividend it is, whether it's ordinary or qualified, that's a different level of taxation. Ordinary dividends are taxed, at ordinary income rates. Qualified dividends taxed at qualified dividend rates, which is capital gains rates, more favorable, 15 or 20%, which is generally going to be lower than your income tax. One of the things we hate to see is you paying tax on money you're not using. And so if you look at that part of your 1040 come this tax season and you see that you've got a lot of dividends, a lot of interest being generated, it may make sense to hold those types of assets in tax deferred accounts so that it's not showing up on your tax return as income. Now, in retirement, that situation may change. You may be living on those dividends. You may be living on that interest. And if you are in that season of life, it can make more sense to hold dividend type of assets or high yield assets in after-tax brokerage. Because if they're held for 12 months or long, they'll be taxed at more favorable cap gains rates. So the impact of this is amplified in your highest earning years, and you got that ghost income going on. But you think about what the S&P has done over the last decade. It's been a good run, and we've had some tough years in there. But everybody focuses on making double-digit returns, and that's wonderful. But if you've got no plan to keep the returns, what's the point? This is what we help families do best at REAP Financial. We help compose an investment and income plan that is being seen through the tax lens first so that you can optimize every aspect of your financial world. I want you to get your hands on our Roth Decision Guide, where we talk about ways to mitigate your taxes, get control, and it's a no cost for all of our YouTube viewers. It's a great report. It's updated here for 2024. Get your hands on it. Email me right now, retire@reapfinancial.com. That's retire@reapfinancial.com, and my team will have it on its way to your inbox. Hit the subscribe button down below. We'll catch you next week. Until then, all the best.